Hi everyone, good morning. My name is Oluwaseyi Fadare. Today we want to start our series of 2026 concerning the Bofad investment strategy plan. So today I'll be going through some of the reports that we provide and use to make predictions of our market. That is the plan for today. So we'll be going through different series for 2026 to enlighten us about the market. Okay. So basically the first thing, let me put this as an introduction section where I just want to give you an insight into what we are trying to achieve. So generally, as we know, Forex trading, it's all about buying and selling. So what we actually want to do is to minimize the risk. So the first thing that we need to consider is what is the direction of the market. So is the market going upwards or the market going downwards? So this we can only do through predictions because we don't know what actually the market is going to be. So all we're trying to do is to get as much as 80%, 90% accuracy in our market direction prediction. So if we are able to get accuracy in the market direction prediction, then it will be easier for us to know what action to take, whether we are going to buy or sell. So the first, and in the market, there are only two directions. Is either the market goes upwards or the market goes downwards. So the first thing we need to identify is where are we? What is our current position? So if we are down at the bottom and we expect the market to go upwards, then what action are we going to take now? So the action we will be taking now is to buy. So the reason is that we are buying now is because the price is down, which means the price is cheap. So what that means is that in the future, the price is going to be expensive. So because we don't want to make a loss because we don't want to spend too much money in the future. So because of that, we buy now when the market is cheap, when the product is cheap, so that by the time the market has gone upwards, the price has gone upwards, then we'll be able to close the trade and make our profit. The second scenario is when the price is high. So when the price is high, what action do we expect? So what we expect when the price is high for the future is that we expect the price to come downwards. Okay. So what are we going to do then? So if the current price is high and we expect the future price to come downwards, then it means we are going to sell. Okay. So what does that mean? That means that for now, the product that we have is very expensive and tomorrow is going to be cheap. So in order to make a profit in order to make profit, we need to sell that product now. So when we sell the product now that is expensive, then when the product becomes cheaper, then we can buy it again. So for example, so generally, for example, you see um, a lot of investments like properties and things like that. So what do they do? They look at a market that is full blown, that the prices of products are very high or the price of houses are high. They sell those houses at big prices, very profitable. And then they go to a new settlement and buy cheap and then build up again, develop the place. The place becomes lucrative, the prices skyrocket, and they make a lot of money, and then they sell it again and go to another place. So that is the concept of trading. So before we trade, we need to identify what do we want to achieve in trading. So we want to ensure that we make profit. We want to identify the current price of the market. We want to identify the future price of the market. And then based on those information, we are going to take our trades effectively. And when we take those trades will now help us to build our profit base, and then we can now be able to make profit either by selling or by buying. So we can make profit by either side depending on what action we take and the right time. So this is the whole foundation purpose of trading. So it's just like you want to travel by air. Prices of flights are not stable. So today, for example, some days ago, last week, I was trying to book a ticket for somewhere, the same place. I tried to check the price last week. Today is the 5th of April. Last week, I saw the price last week, Friday, Monday or so. I saw the price like maybe about 100,000 or something. On Thursday, when I checked the price, on Tuesday or Monday, when I checked the price this week, it was around 105, 110. By Thursday that I was checking it, it was about 115, about 120. So the more the days come nearer to the date of the flight begins to be expensive. And meanwhile, this is just, I'm talking about the cheapest of the prices. The highest was as high as 200, 180, 250, So most of those prices. So it's the same flight. So is either I buy 250 or I buy 150 or 140. It's my choice. So, but then if I bought earlier, probably the current price, the one with 250 as the price, may have been around 150 or 180 about 2, 3, 4 weeks ago. So if I'd had the money then why do I have to keep the money when I could have bought it and safeguard it and keep it? And then by now I would have made profit on it because instead of me spending so much extra, I would have made a savings on it by now, by the time I'm boarding the flight. Okay, so that's just the same thing about trading. So for the year, what are we going to do? So we have the short-term plan and the long-term plan. The short-term plan is always monthly and the long-term plan is yearly. So our long-term plan is from January to December. Our short-term plan is from every month. So our short-term plan is January. We have short-term plan February, March, April. So today, like we said, we are in April 4th. So we have our short-term plan for the month of April. So what are we going to do with our short-term plan? We identify the direction based on the prices that has been accumulated over the past few days. And then we identify the highest price and the lowest price. So what is going to happen for the rest of the month? For the rest of the month is either the market goes upwards or the prices comes downwards. So based on what we have now, we will now be able to identify if the prices is going upwards or if the prices is coming downwards. So if the price now is 100 and then tomorrow the price goes to 101, then it means the prices is going up. So what action do we need to take? Then it means that we need to buy. If tomorrow the price comes to 99, 98, then what is the direction? The market is coming downwards. So what action do we need to take? We need to sell. So these are the basics and the conditions of our trading logic and strategy. So this is what we want to achieve in our trading is to make profit. But for us to make profit, we need to identify our product, we need to identify the current position, we need to identify the future position, we need to identify the direction. Once we identify those 3 core or 4 core information, then we can now be able to know whether to buy or to sell. You cannot be able to know whether to buy or to sell. So those are the things that is going to help us in our decisions for the rest of the year. Thank you very much. I appreciate your time. Have a great time ahead. Bye. My name is Oluwaseun Fadari. Bye and have a great time ahead. Bye. Cheers.